I got this question on TikTok 4,000 different ways. What would you say is the better way? Take the 25-year mortgage or take the 30-year mortgage, and then if you had extra, put it towards the principal. What would you do, or what would you tell our listeners to do there?
I like to always look at things from a purely financial perspective.
Yes, sir.
And paying off your tax-advantaged mortgage debt is never the right move financially. There's always something better you can do with that money. Now, that's not the only reason to make a decision. Somebody doesn't want a mortgage because they feel like some people have a religious calling to pay off their mortgage. I understand that, right? And if that's your case, by all means do it. Some people have just this fear of debt. I get it. Some people want to have a lower cost of living in retirement. I get that too. Financially,
yes,
there's always a better place to put your money than prepaying or paying down a mortgage at, especially when we get sub 6 and maybe sub 5%. That's a really great advantage debt. The long-term average of the S&P 500, just an ETF, vanilla flavored, you don't have to pick any stocks, is like 9.5%. So if you're prepaying a mortgage at 5, that's tax advantage, probably down to 4, right? If you get your tax advantage for owning that mortgage. If you're prepaying something that costs you 4, instead of putting into an investment that earns you 9, where should you put your money? It's easier to think about it from a credit card perspective, right? If you're paying off debt, right? Because nobody likes debt. Some people are nervous or afraid of putting money in the stock market, right? I understand that. But if you had 2 credit cards and one was charging you 9.5% and one was charging you 4%, where would you send your extra money to first?
Yeah, the 9.5.
9.5. So it's the same thing when you earn 9.5 versus paying 4%, right? Yeah. You should put the extra money into that debt. Now, I also am a real estate investor. And so what I tell people is cash is king when it comes to being able to make a move on real estate, right? Cash is trash if you just sit in the bank account, right? But if you have it and you can go put it to work and buy another investment property, like some people just don't like stock market. Cool. Separate your money and don't put it all in this one asset. Put it into other assets. Put it into other real estate investment properties. Also, people tend to start paying extra on their mortgage. That's at, anybody that's out there paying extra on their 2.75% mortgage debt right now, give me that money. I'll give you a better rate of return, right? Like I'll take it and I'll go put it to work because it's so cheap, right? And you can't ever get it back. Yeah. You cannot retake that debt down the road when you're like, oh man, wish I had $100,000 to go make an investment purchase or do something else, open a business, whatever it is you want to do. That money's sunk and stuck in your house. And the only way to get it back out is a transaction.
That was like wisdom, the golden nuggets, because what happens is mom tells us, grandma tells us, our uncle, somebody tells us something that was taught to them. Yeah. That isn't necessarily how actual finance works. We joke and we say, do the math.
Right.
Does it math? In this case, it doesn't math, but you also have to flip it around and say, you know what? Sometimes I'm also just making an emotional investment.
Yep.
Or I'm making an investment to live that lower cost of living. That's great, but don't lie to yourself and say I'm doing this for investment purposes.
Right. It feels good to be out of debt.
Yes.
Right? But I always feel like my mortgage is not debt. Yeah. It's a tool. Right?
Yes.
And I think a lot of that wisdom, the grandma's wisdom, came from the Great Depression when people didn't have anything and they had their house and the banking rules were different then.
Right.
Banks could call you up and you were on time with your mortgage payment and they could call you up and say, hey, your note's due. We need all $5,000 left on this note, right? Because the house was worth $10,000 at that time, right? Yeah. We need all the money right now or we're going to have to take your house back because the banks were running out of money. Yeah. They can't do that anymore. If you make your mortgage payment, you're on time, they can't come take your house. Yeah. They can't call your note due because they want to and they need the money, right? So that wisdom was wise then, but things have changed, right? The rules have changed and that can't happen now. So I'd rather put the money someplace else. The other thing too, people think it's conservative to pay off their mortgage. I don't think it is. And the reason why is you have to do a transaction to get to that money. You have to sell your house. You have to refinance or if you have to get a home equity line of credit. And I can't tell you the number of times people come to me and say, Cody, I need to do a cash out refinance. And I'm like, okay, what's going on, right? Well, I lost my job.
Yeah.
I can't get you a cash out refinance if you don't have an income source.
Bingo.
Right? But if over the last 10 years, if they had sent that money to their investment account and put it into an ETF with the S&P 5, and not investment advice, but if they'd put it into something like that, they could call up their financial planner and say, hey, I need $20,000 to get me for the next 6 months because I lost my job. And they'd say, where do you want me to send the check? And I have to say, I'm sorry, I can't do it. because you don't fit into the loan category, right? So I think it's more conservative to have some money. Now, if you're all set and you've got great retirement plans, and you've got great nest egg, and you've got great investment dollars, and you want to pay off your mortgage, cool. Could you still do better over here? Probably. But if you want to pay it off, awesome. If you don't have those other things all set, you've got to work on that first.
Yeah. You've got to get up that active income. You've got to increase that monthly reserves and get it to yearly reserves.
Yes.
Because on a certain level, they'd be better off just to take the extra cash, put the cash on the side, have it there in case a good deal popped up.
Yes.
And then if the good deal didn't pop up, or if they hit hard times, either way, they're there to protect themselves. If it all went into the house, it's like impossible to just claw it right back.
Right.